Hey, you guys, this is Tamiya Robles. I'm a credit repair specialist, credit repair expert, the owner of Fix My Credit Now 50.com, the host of podcast Coast to Coast Credit. Welcome, welcome. So, today I'm doing a reaction video on a clip from CNBC, and they're talking about the mortgage fee and the update going into this new year. So, this was actually a 2023 clip and they were talking about moving forward. In a nutshell, they're supposed to say how lower credit scores are supposed to help you get a mortgage, but I'm not a lender. I don't know much about that, but as a credit person, I feel I can at least check it out and then give my opinion. So we are going to hop right into it.
Guy, it's good to have you. Pretty wonky, but consequential debate. A lot of people trying to figure out what's really going on here. What do you say?
Yeah, it is hard to figure out. It's a little bit in the weeds. It's the kind of thing that mortgage lenders normally track, but not anybody else. But, the bottom line is some borrowers who have high credit scores are going to be paying slightly more, and some borrowers with low credit scores are going to be paying slightly less.
I actually do remember them bringing this up last year. It was close to the fourth quarter, and I didn't understand it at all. I thought it was odd, but then magically I didn't hear about it anymore. So I really don't know what's going on in these streets when it comes to the mortgages and having a low score versus a high score. But let's keep watching.
So let me ask you this: I get the idea to make the housing market more equitable, more accessible, more available to people. But to the extent that you make loans more available to individuals who are shakier credits, are you inviting a possible sort of replay of the subprime crisis of 15 years ago?
I was just about to say
I don't
that.
think I'd go that far. We're certainly increasing the risk. Two of the biggest factors over the years that have determined credit risk or the likelihood of a mortgage default are no equity or high loan to value ratios and low credit scores. So to the extent you mix those two, you're certainly encouraging more risk. All these loans.
That's concerning. The fact that you can admit that this process is encouraging more risks. Why would you want to do that? I'm not sure. That's odd to me. I know there were issues in 2022, 2023 regarding the housing market and the interest rate and not being what it was before. And maybe this was to give people more of an opportunity to purchase, just to push the housing market along. Maybe that's the case, but that's a little concerning to me that they're going to take that much of a risk.
So we're talking about also carry private mortgage insurance. So to some extent, that is meant to offset the risk to Fannie Mae and Freddie Mac.
Is it true what Diana said that high income borrowers still pay more than lower income ones?
Higher income borrowers are going to pay a slightly higher fee than they were in the past. But the difference is if you've got a low credit score, let's say 660, compared to someone with 760 and the comparable loan to value ratios, you're going to pay 3 times as much with that lower credit score.
Of course.
So lower credit score.
Maybe that. And I didn't know 660 was deemed a low credit score. I know when my referral partners send clients over for me to fix their credit so they can get a high credit score or higher credit score to get approved for a FHA loan, I didn't realize that the minimum was deemed to be a low score. Okay, now we know.
Individual still pays more than the apples to apples on a similar size loan than a high credit score individual. But the high credit score individual is going to be paying higher fees, and the low credit score individual is going to be paying lower fees, right?
Exactly.
Okay.
It's, marginally different. It's not a huge increase, but
Who
that's
cares?
basically
It's
it.
still
And it's, a goal is to make Fannie Mae and Freddie Mac's loans more accessible to lower income and minority borrowers, and this is one way to do that.
Yeah, you said this was in the weeds.
So if that's the case, then what I'm getting out of that is because I'm like, make it make sense. Why would you do that? So if they're making these changes to make lower credit score consumers um, able to purchase a home, then people with higher credit scores have to be penalized somehow, some way. And because the risk is higher with someone with a low credit score to default on a loan, for example, it sounds like the industry, they're trying to recoup money in advance before it gets messy. That's what I'm getting out of this. I mean, it's brilliant, but it's messed up at the same time. This is the best you could come up with? Okay. All right.
Poison ivy now, Kelly.
I was going to ask about a 40-year mortgage. I mean, we've seen innovations like these discussed. And would something like that be more straightforward? Are there other ways of achieving these goals? Or why do people think that this one in particular is useful when it's hard to understand, sort of small potatoes around the cost of owning a home? Why this fix when are there other fixes out there?
Well, it is unusual to see something like this. Traditionally, we've seen Fannie and Freddie have special programs targeted at lower income borrowers or people with lower credit scores. And there's an education function and there's a specific application, but it's outside the mainstream. This is one of the first attempts we've seen that's really mainstreaming the underwriting to bring in lower income and minority borrowers.
Okay. Okay. Lower, let me fix that. Lower income and minority borrowers. Now, does that mean, is that, I don't want to say it, but I got to say it, like lower income and minority borrowers, are they deemed to have lower income, lower credit scores automatically off the rip? Probably. Probably. So, okay, we're being penalized. People that have higher credit scores are being penalized to help the minorities um, purchase a home. People with low credit scores, people that wouldn't have been able to be approved. Now they're going to be approved on the with the higher income, higher credit limit clients. I get it. I don't. My opinion on that is I'm with the lady. Like you couldn't have thought of any other options than that. I would like to have heard what other options were on the table besides that one. It's interesting. Again, like I said, I haven't heard this. Again, this is not something I've heard regularly on in these mortgage streets. I would actually need to put a lender on the phone with us and get on a call, get on the get on the podcast with us and explain that and to see if that's accurate, if it's still going on, whether it's just a proposal, if it's still popping but not heavily utilized. I have more questions than answers. On one hand, I am glad that it's opening doors for minorities and people with lower credit scores to purchase a home. But when you have a low credit score, you don't get the best deal. So it seems like both sides are losing if this is practice. So that's what I have to say about it. I have to talk to a lender about that and get their thoughts. I have somebody in mind, and they would be a good person to interview. But other than that, let me know what your thoughts are. And have you experienced this? If you have a high credit score and you recently purchased a home, do you feel that you got the best deal? And if you have a low credit score, did you purchase a home recently, or was it super easy? Do you feel that you had a good deal going on? Let us know in the comments. All right. In the meantime, be sure to like, comment, subscribe, and I wish you guys